Okay, as we all know, as we've all read in the headlines, the Bank of Canada has increased the overnight lending rate by 75 basis points. As a result, all of the lenders in Canada will also increase their bank prime by 75 basis points. Those announcements have already made their way into my inbox. So if you are a variable rate mortgage holder, there are two things that could be happening. If you have a VIRM, variable product, so if your lender is TD, one of the credit unions, Manulife Bank, your mortgage payment will stay the same, but the amount of each payment that goes towards interest and principal will be adjusted. If you have an adjustable rate mortgage, that means your mortgage payment will be going up at your next mortgage payment a month from now, okay? Let's take a peek at that Bank of Canada announcement to see what exactly they told us today. In this announcement, the Bank of Canada is telling us that they have increased their overnight lending rate by 75 basis points. And they are saying, listen up, Canadians, we are willing to keep increasing this rate in the event that inflation remains incredibly high. It's important to read this last paragraph. Their language is very hawkish. They are telling us that if required, more interest rate hikes are coming our direction. What did that do to fixed rates this morning? Were they adjusted? No, if you have a fixed rate mortgage product until your mortgage is up for renewal, your fixed rate is set, okay? But that did put a little bit of pressure on bonds this morning. Since early August, we can see that in this chart. I'm just going to zoom in a little bit so that you can see it a little bit better. Since kind of August 19th or so, bond rates have been slowly ticking up in Canada. So we have seen a little bit of an increase in fixed rate mortgages. And again, today you can see after that 10 a.m. announcement, we did see bond rates bump around a little bit. They're back down. We do expect to see a slight increase in fixed rate mortgages with this hawkish language, as fixed rate mortgages are very much a predictor of where variable rate mortgages will go. Okay, so important to note that your fixed rate mortgage is not going to change until your mortgage is up for renewal, but the future 5-year fixed rates are likely to increase a little bit with some of the hawkish language that was in today's announcement. What does this mean for people that don't have a mortgage and are shopping for a home? What it means is that if you were trying to qualify for a mortgage using a variable rate mortgage, you qualify for a little bit less, because this increase in bank prime will also increase the stress test rate that you have to be tested at, okay? So it's super important that you're speaking to your mortgage broker and you really understand exactly what you qualify for in today's market under today's circumstances if you're out shopping for a mortgage. Finally, super important to note that the next Bank of Canada announcement is on October 26th. So the market should stay somewhat stable until then. We will be very interested to see inflation data, which comes out on September 20th. So follow along here. We'll be debriefing after those announcements.